Okay, so now today we are going to learn how to prepare the income statement. Okay, before that, let's take a look at the difference between the trading business and the service business. Okay, the main aim of the business is to make profit either by selling goods or providing service. The business that buy and sell goods are known as the trading business, whereas for the business that do not buy and sell goods, instead they provide the service, they are called the service business. Okay, so trading business earns profit from buying and selling goods, and this one service business earn by providing service, example hairdresser, travel agent, and so on. Whereas this one trading, buying and selling like a computer shop, the retail outlet, supermarket, and so on. So for a trading business, mm, the assets include unsold inventory, whereas for this one, service do not hold any inventory because they do not sell any goods. They only provide service. That's why they do not hold any inventory. They do not hold any stock. Okay, inventory is the new word. Okay, for the stock. Okay, so now today we are going to prepare the income statement. So income statement comprise of the first part, the trading account, and the second part, the profit and loss account. So we will now start to prepare the trading account. So let's take a look at the first part. So two part, number one and number two. Okay, so from the trading account we are going to find out the gross profit or loss, whereas from the profit and loss account we are going to find out the profit or loss of the year. Okay, after taking into account the expense and income. Okay, from the business operation, meaning the running costs. Okay, aside other than the normal activity, meaning after you find out whether you make a profit from the buying and selling of the goods, then you prepare this second part, meaning after you take into consideration the running costs, okay, to minus the running cost to check if you make any profit. Okay, and this is the net profit, or we call the profit of the year. Okay, after taking into consideration the operation cost. So again, service business do not, because they do not sell goods, so they do not have the trading account. So they will only have the profit and loss account in their income statement. Okay, so for normal trading business you have to prepare these two trade in the income statement, whereas for the service business you only prepare this one in the income statement. Okay, so now first part, the trading account. Okay, so trading account, this one we will just very briefly go through. Okay, because we will see the example here. So inventory, you will see that inventory, you will see when you prepare there are two, opening and closing. Inventory meaning stock. So opening means the inventory at the start. Closing means the inventory at the end, meaning the unsold stock. Okay, the remaining inventory you still have. The remaining inventory, the closing inventory. Okay, so the closing inventory becomes the opening inventory for the next accounting period. Closing inventory, okay, this is just a theory. Okay, closing inventory is value at the cost or net realizable value, whichever is lower. Okay, this is called the prudence concept. We will go through this next time when we learn about the topic on inventory. Okay, so I'll just skip that for now. Net purchase, as you can see, net. Okay, so it's purchase minus purchase return. Okay, you buy from the supplier, and then if there is any goods that's damaged or whatsoever, you return it to the supplier. That's why you have to minus off the purchase return to find out the net purchase. Okay, so this one we have already learned, so I'm not going to go through again. Purchase goods bought for resale, purchase return. Okay, return to supplier. So purchasing, your purchases, after you find out the net purchase, you have to add the purchasing expenses, because these are the costs incurred in getting the goods ready for sale. Meaning when you buy, all these are incurred in your purchase cost, okay, in your purchase, so you have to add it, okay. And then cost of goods available for sale is the opening inventory plus the net purchase, meaning for this amount of goods, what are the costs, okay, the actual cost of this, okay, of goods, of this amount of goods available for sale, what are the actual costs that you get them. And cost of sales is the cost of the goods sold. So it's the cost of the goods available for sale, okay? So all these, the amount of goods that you have, the actual cost of all, and minus the closing inventory, the unsold stock at the end, okay? So you are able to find out the cost of sale. So the cost of the goods that you actually sold. The goods that you actually sold, what are the costs, okay? And we will see more, okay, as we go along. Net revenue, okay, this one revenue is referring to the sales, okay, the sales revenue, okay, but they write revenue for short, okay. So net revenue, net meaning sales minus sales return, okay. Sales meaning sale of the goods, sales return meaning goods returned by the customer. So at the end of the day, we can find out if they will have make a gross profit or make a gross loss from our trading activity. So if our net sales is more, of course we make a gross profit. If our net sales is less, then that means that we make a gross loss, okay, from our trading activities. Let's take a look at how to prepare the income statement, the trading account portion, okay. So this is the income statement and this is trading account portion, okay. We have not yet gone through the profit and loss portion, okay. We just start out with the basic first. So this one, okay, we have already covered. If it's more, sales more, then profit. Sales is less, then it's loss. Okay, so now as I said already, there are two formats. Last time we prepared the horizontal format, which is this one. Okay, this is the horizontal format, this one. This is the horizontal format of the income statement. But nowadays, you are required to prepare the vertical format. So we will just learn about the vertical format, okay? So first of all, you have to write the name of the business here, okay? And then write income statement for the year ended, okay. For example, it could be 31st December 2020 maybe, okay. So income statement, you cannot write at the year, okay. You have to write income statement for the year ended, okay. That means for the whole year ending 31st December 2000. So how to prepare? First of all, this is the format of the trading account. So revenue, okay, and then you have to less revenue. This one is actually the sales, okay. Now they call it the revenue. So this is referring to the sales because trading account is about the trading activity. So it's about the buying and selling of goods. So sales less the sales return, okay, you get the answer. This is the net sales, but normally they do not write this, okay. So this is the net sales, okay. So this is corresponding to if you refer previously, this is corresponding to this part, okay. But we are not going to familiarize ourselves with that format. Let's familiarize ourselves with this format, the vertical format. So you get this, okay. And then next you are going to be doing about the purchase, okay. So the opening inventory, the stock you have at the start, okay, how much, okay, and then you write purchase, okay, you add the purchase, okay. So now you buy more inventory, so you buy more, so you add on to your inventory, and then you add carriage inward, or it could be you have to add it could be custom duty, freight and insurance, packing wages. All these are the costs relating to the purchase of the goods, so you have to add it because it will add on to your purchase. So you add Okay, you add it. So add up together how much, you draw a line. Okay, you have to draw a line here, so meaning to say you add this. Okay, equal to how much. Okay, so these are the goods available. Okay, your purchase plus your new purchase plus your available inventory. So these are all the cost of the items you have for sale. Okay, and then you have to, if there's any purchase return, you have to less it. When you less, this is add, this is less. Okay, you have to bracket it, put the bracket. Okay, so purchase return, when you buy and then you return it to the supplier, so you have to less it. Your stock now become less. And drawing of goods by the owner, so you have to less it because now your stock become less. Okay, your goods become less. So you minus off, draw the bracket to signify it's a minus. So minus off, and then you draw the line. So this one minus this one equal to how much. Okay, so these are the actual, I do not write this. Okay, but the resulting figure is the cost of goods available for sale. Okay, meaning these are the goods that are available for sale. Okay, your ready inventory at the start plus the purchase, all these purchase costs, and then minus the return of the purchase. So these are the costs, okay, of the goods available for sale. So this amount of goods are available for sale, and these are the costs, okay? These are the costs of them, okay? So after that, you have to less the closing inventory. Closing inventory meaning the unsold inventory, unsold goods, okay? So you less bracket, you less it, draw the line, equal to how much you put it on the other side. So just familiarize with the format. So this is the cost of sales, okay? Cost of the goods sold. So these are the, because your whatever you purchase less the unsold goods, meaning these are the goods that you have sold, and what are the cost of these goods that you have sold, okay? So these are the costs of the goods that you sold, and these the cost, and these are the sales. Okay, your sales. Because remember, when we sell the goods as a business, you always try to buy cheaper from the supplier and sell it at a higher price to the customer in order to make a profit. Okay, so when your sales amount is more than the cost of the sales, more than the cost of the goods, okay, of the goods sold, then you have the profit. This will be, you don't have to write this. This will be the profit. Okay. If, for example, the sales, for example, so normally for this will be more. Okay, 1,000 for example, and this one is 500. So your profit will be 500. This is the profit. If, however, for example, your sales is only 500, but this one the cost is more, okay, then this 500 will become a negative. So this one, it will refer to the gross loss. Okay, so now we are going to learn how to prepare this part of the income statement, the trading account part of the income statement. So I want you to try out with the exercise, this one. Okay, so you try out with the exercise. So for example, you see this is the opening stock, because on the 1st January, because on 1st January, so this is the opening stock. Return inward is sales return, return outward is purchase return, and carriage inward, this one will add on to the purchase, and this is at the end is the closing inventory. So to get it started, you can refer again. If you're not so familiar, you can use the pencil and try it out. So you refer again. So first you have to use revenue less sales return. Okay, so you do it like that. Okay, to get you started. Okay, you put here, instead of writing sale, now we write revenue. So how much is the revenue? The revenue is the sales amount here. You can also write sales, or you can write revenue. So this is the amount, 75,200, 75,200. Okay, and then we have to less the now it's called the sales return, okay? But if they give you return inward, then you just write return inwards, okay? This one you can write also sales revenue, okay? It's the same, okay? So you write sales revenue, okay? But now you just have to write revenue and then sales return. Or you can write return inward, but the new term now is called revenue. And the new term now is called the sales return, okay? Sorry about that because this is the old notes, okay? So return inwards, okay? And this sales return is 1200, okay? So you draw a line. And then you minus off how much, okay? After that, you leave a space here. And then you continue on opening inventory. Okay, opening inventory, how much? And then purchase. Okay, continue on with the rest, okay? You can refer here as you walk along, okay? Okay, so that's all. I want you to do the exercise. Do exercise A and exercise B and exercise C. Yes. I want you to try out these 3 exercises as your homework, okay?